Good evening and welcome to my channel Zilka's Favorite with a new topic that is step-by-step guide to journal entry. So let's start to understand about journal entries. Why journal entries matter means why they are important. Have you ever wondered how businesses track their money? It all starts with journal entries. Means to track the business, like what's going on in the business, what's coming in, what's going out. There are journal entries to maintain it, to maintain the record. Journal entries help businesses record every transaction in organized way. All business transactions are recorded in journal time to time, day by day, every day to keep the track, to keep the record. To understand, we must know about source documents. Why understanding source documents is important, right? Source documents. What are source documents actually? We should know it before starting. Source documents are proof of business transactions. For example, invoices, receipts, bank statements. So, source documents are actually the documents that give us proof what has been bought by the business, what has been purchased, what has been sold, what is returned, what is the profit, what is the loss. These are all the documents that give us the proof of all the transactions. These proofs can be in the form of invoices, receipts, bank statements, etc. They contain the details like date, amount, and name of the people involved, like on which date that happened, what was the amount, and what are the names of the people in between the transaction has taken place, right? So these are very important. They help keep accurate financial records. They are needed for taxes, audits, and tracking income and expenses. They help businesses see where their money goes. Of course, from the documents, we will understand the in and out of the business, where it is going, from where it is coming, at what conditions the transactions are happening, is it going in profit or loss. So everything will be clear from the proof that is actually the source document, so that must be maintained. For example, the invoices, bills of purchases or sales. So what are invoices? Whatever is purchased or sales that is written on a bill, it's a form of paper written over there, typed over there, it will be kept in the record. Receipts. What are receipts? Receipts are the proof of the payments that we have received from the customers. Third, the bank statements, record of money going in and out of an account. Whatever in from the account, bank account, whatever is going into the account or coming out of the account, that is maintained in the bank statement. So that is very important to keep track of the business. After understanding the source document, now we should understand the journey from source documents to the journal entries. How to use these source documents in our journal entries? What is actually the method? Find the important details, date, amount, and accounts affected. These details we can get from the source document to enter in the journals. For example, a business buys office supplies for cash. A business has bought something, for example, the office supplies, the stationery, or something in cash. So, this transaction, from where we can get the detail, from which source document we can get the detail of this transaction, we will get it from the receipt. Receipt will tell us that on which date and what was the amount, what was the product, and from whom it is purchased or it is sold. So that document will help us to post the transaction or entry in the journal posting. For journal entries, we should know about the debits and credits. Every transaction has two parts, that is debit and credit. We have read it before. Debits increase assets and expenses but decrease liabilities and income. It means When the assets and expenses will increase, they will be debited, and when the liabilities and income they will decrease, they will be debited. Next, opposite to this, when the liabilities and income will increase, it will be credited, and when asset and expense will decrease, it will be credited. You must understand these points to post the journal entries, then it will be very easy. Here is an accounting equation that you must understand very well. The accounting equation is asset equals to liabilities plus equity. It means the whole asset of the business is actually equal to the liability and equity. What is liability? Liability is something payable that the business has to pay to others. For example, the business has taken the loan or the business has bought something on credit. So that is all liability plus the equity. Equity is the asset of the owner, the investment of the owner that is invested in the business, that can be cash, property, or anything. So the total of liability plus equity must be equal to the asset. That is actually business equation, and all of the journal entries follow this rule and make the account balance. Next, there are some common types of journal entries. We must understand them. The first is sales and revenue journal entries. For example, a customer buys a product for $500 on credit. Here we have to just notice one thing, that customer has bought a product of $500 on credit, means it is on credit, it is not cash, means money has not received yet, it will be received in the future. Credit means the money will be received in the future. The customer has bought something from our company that cost $500, but he will pay in the future, so that is credit. So from this transaction, as we know, always all the transaction has two effects, two entries. Okay, so the first one will be debited and one will be credited. From this transaction, we understand as the customer has bought something, it means the asset has been increased. And second part, as he has bought it on the credit, as he bought it on the credit, it means the money still we didn't receive, but we will receive it. That is called account receivable. When there is a kind of sale that the money has not been received, it will be received in the future. It always goes to the account receivable. Means we will get the payment, but in future. That is also increasing the asset. So how we will mention it in the journal entry? First, we will mention the date, then the account title. At the first account title that will go with this transaction is account receivable, as the account receivable means the asset is increasing, so it will be debited 500. And second thing, as the sale has been increased, something has been sold, so sale is a revenue, sale is income, and when the revenue or income increased, it is credited. So sales revenue equals to 500 will be credited. So this transaction, the two parts, the two dual parts are the two accounts, that is account receivable and sales revenue. One is debited and another is credited, and both are equal. Debit and credit side always must be equal. Second type of journal entry is purchase and expense journal entry. For example, buying office supplies for $200 cash. Here, the business has bought office supplies like stationery or something, and $200 cash they have paid. Now, from this journal entry, as we understand, the office supplies has been increased, means the asset has been increased. And secondly, we can see the cash has been paid. The cash has gone from the business, means cash is decreased means asset is decreased. So how will be the entry? The first account title is office supplies. Office supplies is our asset. So as the office supplies increasing, the debit will be increasing. And the second thing, the cash has been paid means the asset decreased. So $200 will be credited as the asset decreased. So here are the two entries, debit and credit, that are equal. Third journal entries, cash receipts and payment. For example, receiving $1,000 cash payment from a customer. Now, here, in the past, the customer has bought from our company, but he didn't pay as it was credit sale, right? Now that customer has paid $1,000. So what? Now, as the cash has been received, means our asset has been increased. This is one account, right? On other hand, as in the past, when that credit sales happened, that was actually account receivable debit, right? Now that account receivable will be credited as we have received that amount. So now that account receivable will be credited. So you can see in account title that cash has been received. So that is debited $1,000. And on other hand, the account receivable that was debited in that time, now that is credited to show that this amount has been received and it is done, that is closed. Now we have to put all these examples together to make a simple example. Now the scenario is that the business buys equipment. There is a business, any kind of business, for example, business of markers, for example, the business of stationery, for example, the business of medicines or whatever. That business has bought some equipment. A company buys equipment or tools for $5,000. They have bought a business of equipment of $5,000, paying $2,000 in cash. They have not paid the whole amount, only $2,000 they have paid in cash and the rest on credit. Rest of the amount, that is of course $3,000, it is on credit that the company will pay later. Okay, so what is the scenario now? From this example we understand, as the company bought the equipment is asset, of course. So as the asset increased, of course it is our one entry, that is our equipment is our asset. Asset increasing means debited. Second entry from this transaction will be paying $2,000 in cash. As the company has paid $2,000 means $2,000 cash has been gone, means asset decrease. When the asset decrease, the cash decrease, it will be credited, right? Here is also the third entry, that is the rest of the amount on credit. As still $3,000 is on credit, when there is something on credit, the company has to pay something to the other one. That is called a liability. So here the liability is increasing, that we have to pay later. When the liability will increase, it will be credited. Now you can have a look over here just to understand, to recall debit and credit rule. As the asset and expense will increase, it will be debited. When asset and expense will decrease, it will be credited. On the other hand, when liability and income or revenue will increase, it will be credited, and when it will decrease, it will be debited. Now come to the transaction. Equipment that was $5,000 increasing asset, so it is debited. Cash that is $2,000 paid means decreasing the asset. As cash has gone, so it is credited. Third, account payable. That is the liability of the company. Company has to pay later. So that will be credited as liability, always credited when it is increased. So from here, it's very clear that how to post the journal entries by following the rule of debit and credit with the help of source documents. I hope this lesson will be very helpful for you. Keep practicing on it. Just you have to remember the rules, and there are some tips and practices for the beginners that they can follow to be expert in accounting. What they have to do, actually, you have to keep all your invoices, receipts, and bank statements in one place. Means all your source documents will be at one place, so anytime you can check and go through them. Second, record all the transactions daily or weekly to avoid the mistakes. Don't take like many days to post your transactions. Keep on posting them regularly so you can avoid the errors. Check your bank transactions, bank statements to make sure everything is correct. Keep checking your bank statement to confirm the accuracy. Using accounting software to save time. Instead of using the manual method, you can use the computerized way. You can use the software, for example, QuickBooks or Wave. These are the softwares, these are the tools that are very easy to use. These are user friendly, and you can use them to post your transactions, to maintain your journal entries automatically. There you can create the templates to make your transactions easy. You can get the courses, you can learn them through online courses, for example, on Coursera or YouTube. Many lessons have been freely provided. You can follow the blogs to practice your business transactions. You can follow the Facebook groups. You can join the forums to keep in touch with the accounting world. So that's it for today, and keep practicing. Till the next week, take care. Allah Hafiz. Bye bye.